Good morning. Personal guarantees explained and what borrowers need to know before signing. And if you're applying for a mortgage, commercial loan, or business financing, there's a high probability you'll be asked to sign a personal guarantee. And most borrowers just gloss over this part. And that's a mistake because a personal guarantee is one of the most powerful and the most risky components of any loan structure. So let's talk about what is a personal guarantee and how that could affect you. And a personal guarantee, or PG, is a legal commitment that makes you personally responsible for repaying a loan if the borrowing entity, such as an LLC, a corporation, or partnership, cannot. And in simple terms, even if the loan is in the business name, the lender can come after you personally. So, why lenders require personal guarantees? And from a lender's perspective, this comes down to risk mitigation. And commercial lenders underwrite based on cash flow, so DSCR, debt service coverage, but also the collateral and the loan to value, as well as the borrower strength. And a personal guarantee adds a fourth layer, and that's personal accountability. And this reduces default risk and aligns incentives, and often it translates into improved pricing for you too. So there is a benefit. And if your name is on the line, you're most likely to protect the asset. So let's talk about types of personal guarantees. And not all guarantees are structured the same, but understanding the difference in between them matters. So first is an unlimited personal guarantee. It means you're responsible for 100% of the debt with no cap on liability, and that's most common in small business and SBA loans. And it's also the highest risk for borrowers. Two is a limited personal guarantee. So liability is capped, say 25 or 50%. And often used when there's partnerships or multiple sponsors on a deal. And it's more strategic and negotiable. And three, there's bad boy guarantees. So these are often common in non-recourse carve-outs. It applies only if certain actions occur. So if there's fraud, if there's a bankruptcy filing, if there's misuse of funds, or if there's environmental violations. And these are common in non-recourse commercial loans. And they're often misunderstood as a no risk, which is not true. And the real risk the borrowers miss, and this is the most important part that people don't fully process, a personal guarantee allows the lender to pierce the corporate veil. So what does that mean? It means your personal assets may be exposed. So your savings, your investments, and any other holdings could be at risk. If there's lawsuit and deficiency judgments, then that's some of the mechanics of what makes it possible. And this is why structure matters more than rate. And when personal guarantees do make sense, well, a personal guarantee is not always a bad thing. And in fact, it can unlock better loan terms, higher leverage, lower interest rates, and it can get you access to capital when deals marginal. But for first-time investors and business owners, personal guarantees often the entry ticket into a larger opportunity. So, how smart borrowers manage personal guarantee risk? Well, professional borrowers don't avoid guarantees; they just structure around them. So, let's have a master class on this. Here's how: potentially negotiate your burn off clauses. So guarantees reduce or disappear after the property stabilizes through a refinance or just through time based milestones. And what that does is limited exposure and pushes for partial guarantees instead of full recourse. And also, you can strengthen the deal with higher DCR, more reserves, or better tenant quality. Think that if the deal's stronger, there's less need for heavy guarantees. Plan the exit strategy. So refinance into a non-recourse debt or sell before risk increases. But here's the broker advantage. Most banks present guarantees as a non-negotiable item, and that's not always true. And a mortgage broker who has access to multiple lenders can help you structure deals with reduced guarantees or identify non-recourse options. CMBS, agency loans are all great non-recourse products. And we can negotiate terms based on your borrower strength. And this is where strategy separates average borrowers from professionals. So here's the final thought for the day. It's important to understand what you're signing. And a personal guarantee is not just paperwork. It's a risk transfer mechanism from the lender to you. And if you understand it, you can use it as a tool, and hopefully you learned something today. And if you don't, it can also become a liability that follows you for years. So pay attention. That is it for the day. Please visit my website, billraponline.com. Love to talk to you more about your specific situation and how we can better it. Have a good day.